we keep seeing new patterns, and not just the pattern that you find behind me at Nvidia's GTC conference. I'm talking about increasingly positive ones. After 3 weeks of negativity, the new pattern today, even though oil rallied 3%, many stocks still managed to go higher. That's right. As oil jumped, investors ignored that action and instead focused on the fundamentals of individual companies, excluding oil. And when you take petroleum out of the equation, when you ignore the increase, it looks pretty darn good. Buy, 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 buy. With the Dow gaining 47 points, S&P advancing 0.25%, the Nasdaq climbing 0.47%. But what happened today is the kind of thing that's really not supposed to happen at all. See, last week, many thought the war with Iran was out of control. Since then, nothing's really changed, except our government's refrained from bombing Iran's oil infrastructure. Now things feel a little less crazy, although that's not saying all that much. But it wasn't enough to get people buying. What they bought was as revelatory as what they didn't buy. The anomalies are stark. This morning, Ed Bastian, the CEO of Delta Airlines, came on CNBC. Now, when I saw Phil LeBeau standing next to him, I could see a wrecking ball coming right at the beleaguered airline stocks. Sell. You'd think $95 oil would be lethal to the entire industry, right? Turns out, Delta's putting up some incredibly strong numbers, both for regular travel and business travel. It was an extraordinary display of real-world positives clashing with Wall Street negatives. And today, the real world won. Then there's the most toxic area of 2026. The stocks of the private equity firms. Oh, man, I remember when people used to want to go work there. Now, we watch these PE stocks sink into the quicksand. Sometimes all we see is their heads. Sometimes we just see their hands. Today, though, these stocks, Masters of the Universe, Blackstone, Apollo, Ares, just blasted off as the cognoscenti detected that the so-called crisis of private credit may have gone too far. Maybe it's not even a crisis. Maybe it's just a debacle. Case in point, people hate the enterprise software plays. They assume that the AI companies behind me have made this kind of software obsolete. But today, Leslie Picker interviewed Orlando Bravo. He's the principal of Thoma Bravo, a private equity firm that's made some huge enterprise software investments. Now, if you listen to the bears, anything Orlando touches turns to lead. He admitted that there's been some instances where he overpaid for a given company like Medallia, which is a customer experience management platform. I always wanted one of those. But then he made a bold claim that 77 deals he's done in the field are actually doing well. That's a lot. It made me, and obviously others, think that the bears are going to be roasted if they keep shorting this group. The era of good feelings extended to the banks, which they got real oversold, meaning that sellers panicked, creating great prices for buyers on the way out. Now, you'd think that the companies here at Nvidia's GTC conference, where we've encamped for the last 2 days, would also be running, led by Nvidia itself, right? But the world's biggest company is finding out that most big institutions already own its stock. Everyone's already in the pool. So despite some incredible numbers unveiled by CEO Jensen Huang during his keynote address, the stock just couldn't get any traction today.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.